The New Year highs this week back above $18 and to levels we haven't seen since April of 2017. What's behind the recent run-up?
Well, you know, the ratio to gold and silver has been really getting a lot separated since gold took the great big run off of its mid-range, breaking out over 1,300. Silver sort of stayed quiet, and it really did not start really running until the beginning of August. And now it's in a breakout space that's sort of bringing that a little bit closer to the natural relationship in the ratio. The natural relationship is really about 75 to 1, though we've seen areas where it's as low as 40. That was around 2011. Now just a week ago, we were up at about 92. Yeah. And so now silver's sort of catching up. So it might be that reversion to climbing into that space, saying, hey, listen, silver's has been not performing as well as gold, time to pick up. But it could also be something underlying like, wow, gold has gotten so expensive. Let's go to the next semi-precious ones to see if we can start accumulating there. Because all the weak currencies and the negative yield and all those things we're hearing, it's the flight to safety that we talked about a little bit ago. You sent that note, and that really is what we're seeing across the board. All currencies, gold is appreciating in all currencies across the board. And I think what's happening now is wow, that's so high. Yeah. Let's see if we can take a look at some of these other semi-precious ones.
Yeah, you know,
so that's
Anne-Marie,
what I think's driving that.
Yeah, that's a great point. And I hadn't heard that, but I really subscribe to that in many ways because it's odd when you look at silver, considering some of the demand unknowns that we keep hearing about tied to U.S.-China trade, that silver has been rallying. I mean, especially when you look at it relative to what we've been seeing in copper.
Exactly. That's really what I think is driving this right now. There's just, wow, that's too expensive. Let's go to the next cheaper ones and see what we can get.
Yeah, how about gold? While bid to the new highs recently, it seems to be content in terms of watching silver go at this point. I guess, as you mentioned, that's going to tighten up that silver to gold ratio. But in terms of the bid behind the gold that we've been seeing, do you think it's mostly rates or has it been some of the geopolitical tensions? Because it certainly hasn't been a weaker dollar. You mentioned the currencies which have been under pressure, but the U.S. dollar hasn't been. It still holds 98.
That's exactly right. And the fact that it's running in the space of the high dollar, it tells us that gold is appreciating across all assets in terms of currencies. So what's pushing that? You know, I see a lot of negative divergence sitting in this gold move up. The big thing is how much volume is sitting out there. I know that you've talked about it. The volume is just so tepid across the board. I think it's a lot of latecomers to the party, and then all of a sudden we're starting to hear these little voices that are saying, you know, perhaps yield doesn't go quite negative. Perhaps it starts lagging around. Maybe we have 2 more drops in the interest rate, and then we sort of try to fix things from that. A lot of things going on there, and I think that traders are pulling back. So the ones that are pushing gold up and silver up are sort of the late comers to the party in my mind. For me, I'm trimming every time I see a new high.
Let's talk, Anne-Marie, a little bit about copper to new lows this week, down below the 250 level. I wonder if the crude draws and seeing silver rally lessened some of the concerns that the bears were expressing this week when we saw that move down below the 250 level, because it was somewhat short-lived, and we're seeing copper back up around 255, currently trading slightly higher on the day, but again, just short-lived in terms of that breach of the 250 level.
Absolutely. Now, the reason, and I put that one in quotations, the word reason, but I suspect that the reason that the drop was so short-lived was because the Commitment of Traders report puts commercial hedgers at an all-time high in terms of being long this event, and speculative traders are at an all-time high being short. And so they're on totally opposite sides of the fence. Yeah. So the question is, who's going to win that? Yeah. And in the end, the Commitment of Traders report, they're more commercial hedgers with weight trying to capture these bottoms. But I can tell you, looking back 2 years, traders have been talking about, wow, this is about the time for copper to rally. Right now, we're looking at 10-year lows.
Yeah.
And so we're sitting there and we're waiting for either the washout catalyst where it drops really hard, and then we start seeing buying pressure start to hold. And I think that might be a lot of news coming in for the yield curve inversion. That's really where that dropped off a cliff. And then all the buyers picked up right there. That news sort of coincides. And so we're seeing that these deep dips are getting bought. And the question is, go ahead.
And Marie, I'm wondering, you mentioned the question being who's going to win in terms of that battle there. I'm wondering what it's going to look like once some of the dust starts to settle and once some of this trade starts to unwind, because as you mentioned, Commitment of Traders reports is pointing to the sentiment being heavily one-sided. Just your thoughts on that in terms of when that starts to unwind a little bit.
Well, again, we could have something very news-based. If it drops below a level and there's no bid there, I mean, because the commitment of traders is so heavy, we could have a very steep washout. That is a significant concern. I don't know. You know what? The news is so crazy right now.
Sure has been.
I have no idea what it is that it's going to do, but something's about to run. Now, the big last element would be the following. If we have this yield curve inversion that we've been talking about, it's getting steeper and steeper. What we notice is, like you mentioned just a few moments ago in the prior segment, we've got about, maybe 1 to 2 years before that actually engages. That gives the commitment of traders and these hedgers a chance to watch this rally into maybe a 265 or a 275 area, and then maybe they cut and run as we move into a space where it's really going to hit. I just think it's going to be very interesting over the next case, but big dips down are getting bought, so it's not a place to sell the lows.